how long have you been in Canada for? I mean, whether it's 25 days or 25 years, like my family that moved here from Mexico, we all know how hard it is to integrate into Canadian life. It's a fresh start. And whether it be trying to find a job, work permit, building up credit, getting permanent residency, let alone getting a mortgage, there are a lot of things that you have to work with, right? Now, if you've been here for under 5 years, you're in luck because the government has some very special programs that make it much easier to become a homeowner. If you want to apply for a mortgage and literally do it exactly like any Canadian, you need 3 things. First is you need to make sure that either you have permanent residency or you've at least applied for it. Secondly, you got to make sure you have a work permit. And lastly, you've got to have strong Canadian credit. If you haven't at least applied for permanent residency or you just don't have strong Canadian credit, this is exactly why the new to Canada mortgage programs from the government could be perfect for you. Now, for the last 18 to 24 months, have you been paying credit cards or any kind of loan? So have you taken on credit? If you haven't even been here that long, then the answer is probably no. And that's where you don't have to panic because there is a way for you to prove alternative credit from the country you came from, because the government knows that obviously you're a good steward of capital and you probably were great with credit in your country of origin. So there's a special program. There's 2 steps for you to prove alternative credit, and here's what they are. Now, step 1 is there are 3 programs, each offered by one of the 3 mortgage default insurance providers in Canada, and you have to look into those. Step 2. Now, based on whatever program you apply for, and of course, it really depends on your unique situation, there are certain documents you have to provide to prove alternative credit. Like literally there is a ton, but again, it depends on your situation. So make sure that with your mortgage broker, you really understand what documents apply to you. One thing about down payment, which is really important, and we've had so many clients that didn't know this rule and they got really into trouble at the worst time with their mortgage, is you've got to firstly have your money in a Canadian bank account for at least 30 days. You also have to prove where the money has been the last 90 days. So there has to be a very clear paper trail. So for example, if your parents gift you the down payment because they can't lend you the money, you can't ever borrow money for a down payment. It has to be gifted to you and they have to write an official letter about it. So if they're giving you that, you've really got to make sure you have these things in mind, because otherwise the government might actually say that your down payment is not valid and therefore the lender doesn't give you a mortgage. This may seem really strict, and it is, for good reason. There's been so much fraud with real estate, especially in Canada recently. Canada has a very strict anti-money laundering legislation, and basically they've got to know where the money's come from. It can't be money that came out of nowhere or from something that's illegal. And they just got to make sure that, again, like you're not borrowing this money for your down payment. It has to be your own money in Canada, or it has to be gifted. If you want the best rates with prime lenders, generally speaking, what you have to prove is consistent monthly income. Because what the lenders do is they look at your monthly income, and then they look at what you would be paying on your monthly mortgage payments, and of course other payments as well. And generally speaking, rule of thumb, your debt cannot be more than half of what you are making on a monthly basis. So with GDS and TDS ratios, they basically have different numbers they use, and some lenders can extend the ratios and be a bit more flexible. But again, they're generally under 50%, usually 39 to 44% for GDS and TDS. And yeah, basically those are specific ratios which you should definitely ask your mortgage broker about, and also Google if you want to see the exact calculations on how they calculate income and debt. So what are your next steps? Firstly, we talked a lot about for proving alternative credit. There are some fantastic government programs, especially if you've been here for less than 5 years. And lastly, for your down payment, you got to make sure that it's not borrowed, and if it's gifted, or wherever it comes from, it has to be within your bank account at least 30 days. And those are really, really important things to consider as you're getting into the mortgage process. Do you have a question or an opinion on this? Please leave a comment. I both read and reply to them all. And look, if you have a friend who has recently moved to Canada, please send them over this video so they can get settled into their new home in the right way. If you learned something new today, or you want to keep elevating your life in Canada, as always, friends, please make sure you're subscribed and alerted for the next video. And as always, keep leveling up your living.
Hold up.